talk about the 1% rule. Nobody likes portfolio management, but have you ever blown up a stock account before? And did you know 80% of traders fail in their first year? But did you also know that around 60% of all new restaurants fail in their first year? Even up to 80% will be shut by their 5th year anniversary. And what's the reason for that? Because most people don't know how to equate for the rotation of money. The rotation of money is very, very important. In business, if you buy a bunch of goods, then it takes time to sell those goods. If you put those goods on credit, then it will take longer to collect that money. There's always a rotation of money cycling in and out of business. Same with the stock market. Same with your portfolio. It's based on cycles. So when we talk about a 1% rule, it's not to keep you down so that you can't make millions of dollars. It's to keep you in the cycle of motion of continually being able to make money. Just being 100% at risk doesn't mean that you're going to make $1 million. Once you can figure out that some trades will happen really quickly, some trades will happen mediocrely, 1-2 weeks, some trades will take longer, you'll start to understand there's a cycle to these things. And when you put all those cycles together, then you'll help manage your portfolio. For example, let's say you have $10,000 and you use 5% per each trade, average of 3 trade alerts per day at 5% per trade means after 5 days, you'll have 75% of your portfolio out at risk. And if you got to double down one time, you'll be close to $8,000 in that first week, meaning you'll have to wait for one of these trades to be executed to be able to enter into a new trade. So then you're impatiently waiting for these trades. And let's be honest, when we're impatient and need money, what do? Irrational things. And again, that's why I just want to remind you of the probabilities. Using 5% might be okay if every trade was perfect at a V-shape, like Clover. Man, we hit that perfect. It went a little bit against us, but after a couple days, we executed our target. But we're talking about the cycle of money, and so we have to understand all the probabilities that will come in, like a double top or a head and shoulders pattern, or even price might go parabolic against us. So that's why we got to make sure time and money is on our side. Same scenario, $10,000 portfolio using 1%. Again, we're averaging about 3 trades a day. After 20 trading days, that puts you at 60 trades, which is a lot. We're seeing that we're having to double down about 10% of the time, meaning you have about $1,500 to $2,000 at risk a week. And instead of 1 week having $8,000 out, you have $8,000 spread out over 1 month and still a little bit of money to buy new trades. After a couple weeks, you'll start to see things like this where these trades close out for a profit, adding to that cash. Some of these trades might not have been filled, so you could take those off the table after a week or so and add them back to cash. Some of these trades are going to be double downs that you'll have to invest 2% to be able to make up for possibility of losing the first trade. In your first month, you shouldn't have any losses because you're holding till expiration, meaning we're hoping to capture that time decay. So even if there's a little move at the end, you'll still be profitable. We're doubling down as an insurance policy only if the trade lines up with our other rules. So you can see in this scenario, it gives you plenty of money to cycle in and out of trades. Being patient because you're going to have different probabilities. This isn't about getting rich quick, it's about getting rich forever. Be part of the 1% who do the 1%. And this will give you the confidence to increase your trading portfolio. My mentor told me every week, no matter what I do, I've got to take 20 to 25% out of whatever income I was getting and put it into investments. I chose the stock market. So yes, I still take and add money to investing, even though I'm making money through investing. What are you doing with your extra money?